All right, everybody, welcome back to Stacks by the Numbers. Today is, what's today? Wednesday. It's about midday here. We got a little over an hour to go before the close. Markets have been bouncing around. We started off hot, then we started selling off. I saw the Dow go red. Now it looks like the market's trying to bounce back. After yesterday, obviously, those disappointing CPI numbers, which, of course, if you have been in my Discord link in the description of every video, free to join. And I've basically been saying that hyperinflation is going through the roof. I don't know what the hell these people are talking about, pumping these markets up. And then we have a big drop yesterday and we have a sea of red. So I can appreciate the fact that we're seeing a little green today, but the fact that it's only slightly holding this green, in my opinion, I actually think we continue to sell off moving forward, but we'll talk about that at another time. Today I wanted to take a look at Symbotic Incorporated, ticker symbol SYM, listed here on the NASDAQ. This company right now, a touch below $46 a share, up a little over 2 points, about 5% here on the day. Looks like what almost could be a bullish hammer, but of course, remember, to form a bullish hammer, the stock has to close at the high of the day, which right now 45.95. So it's kind of holding that level, but we have to see where it closes, of course. And if it does happen to close above that, just a quick look at the technicals here, we may jump up to the 48, potentially this line here, even 49 potentially. But again, we'll cross that bridge when we get to it. But if it does show us a bullish hammer, I'd say conservatively, we can see this fib level tomorrow. This is a one-year chart, by the way. Could see this top fib here, 47.06. And just looking at the technicals quick, and then we'll get into the numbers. But you can see I went from this bottom here, bottom of this candle, November 17th, 2022, connecting to the bottom of that candle, December 28th, 22. And then I just kind of drove it across. And you can see that it has been bouncing around recently, around this trend line. However, this was a long-term support, really, going all the way back to before 2023. And we can see that we had the flash break, and then we kind of rallied up going into these earnings. And of course, the company comes out with a phenomenal beat here on the top and bottom lines, coming in almost 28% above analyst expectations on the revenue side. So this is why when companies are performing like this, we can appreciate the fact that even though in some of the numbers and the fundamentals, we could make the argument that we do have a potential overvalued situation. But at the end of the day, if a company, again, consistently comes in above expectations, the stock is more than likely going to get rewarded. Since that point, we've kind of been dropping down into this little consolidated range here. Earnings came out just a little less than 10 days ago here, February 5th, and we can see another nice beat there on the EPS. Estimates of 2.5 cents, company posts 3 cents, and we can see also basically coming in line with analyst expectations on that revenue of a touch over 368 million. Company comes in about $250,000 above analyst expectations. So they have been growing nicely. And even if we go back here looking at some of the last quarters here, this was the last red that we see. And of course, it was a very slight miss there on the EPS side, still beating on the revenue side. And of course, before that was a nice beat. So this company, as we see, 240 million, 200 million. Now in the last couple of quarters, we're up to 390, 368, right? So revenue has essentially doubled like inside of the last 12 to 15 months. So the company obviously doing something right. I can appreciate the fact why people are talking about this. But again, we drop below this long-term support trend line. We are currently below it. And in my opinion, we may kind of stay inside of this channel going into the end of April, it looks like, and then we could potentially start running up and even break out above that top trend line here on anticipation of these earnings. As we see estimates here on the revenue side, now we're getting above 400 million. So that's why, in my eyes, that's the real test for a company. If you're, consistently growing and beating earnings, that's phenomenal. But it's when they pump up these estimates to that next leg higher, right? Now we're going to the next level, to 400 plus million. So if the company is able to beat here, especially on the revenue side, I'm thinking, in my opinion, then we're going to potentially pop up and we can start seeing mid-50s and potentially back to the 60s where it was. Now, some of these numbers, again, I do have, in my opinion, some green flags here with the stock. And there were also just a couple of red flags that I just want to bring to your attention, just so you guys know what's, everything that's out there, and we try to cover all bases here. So we have a market cap of a touch over 4 billion. All right, the company's losing 28 cents a share. We can see the beta 185. So that's, 1.85 times as volatile as the overall market. That's what the beta means. And we can see, again, that the company has been doing very well for the last 4 straight quarters on the EPS side. Annually, we're seeing good growth here again. Revenue essentially doubled here, going from a touch below 600 million to almost 1.2 billion. So the company really has been doing well. And along with the revenue going higher, what we're seeing is, in my opinion, what you should be seeing. The more money the company makes now, the closer they are to net income positivity, right? And we can see for last quarter, even though revenue took a slight dip down from Q4, we can see that now the net margin percentage is only sitting at about minus 0.5%, right? So look at that, net income minus 1.9 million. So that's why, in my opinion, I actually think that this quarter now, of course, it's a couple of months down the road, but this quarter, in my eyes, is going to be the breakout quarter because we're going to potentially have something similar to like a Palantir, right? They were beating earnings on the top and bottom lines. They were slowly growing. People were, again, from day one, in my eyes, I felt the stock was a little overvalued, right? So it had that initial pump off the hype, but then it kind of sold off, went into this long-term little downward consolidating channel. But then what happened? Not only did the company beat that earnings, but they, again, achieved net income positivity, and they did it ahead of schedule. So that's why we saw that pop in Palantir, and I actually think something very similar can happen here with Symbotic here, SYM. But, yeah, a lot of these numbers are looking really good. It's the growth, man. When you see a company consistently growing, like I always say, follow the money, in my opinion. Follow the money. You can see automation technology company engages in robotics. Very nice. 1 year average price target just around $55. So that is about 22.5% move from where we are now. So we do definitely have some growth potential here with this company. We have 14 analysts currently watching the stock, 9 giving it a strong buy, 2 giving it a buy, 3 saying to hold. So everyone out there is in agreement that this is a buy and a hold. And if we look at the forecast, I can appreciate the fact as to why everyone's pretty bullish on this. As you see here, moving forward, we're expected to maintain this positive EPS side here moving forward for the next 3-4 quarters. You can see 2, 4, 6, 8 cents. Very nice. And if we look at how the company has performed over the last 8 quarters, we can see only one slight miss on the EPS side. And we have to go all the way back here to like the first half of 22 before the company, look at that, just a slight tiny miss on the revenue side. And then the next quarter after that, they essentially doubled revenue and really just haven't stopped since then. And look at the forecast here moving forward now. Next quarter, north of 400 million. After that, almost 450. And then we're going up to north of 500 million. And then 525 million. So if this company continues just doing what they're doing, I do think that 55, I think that really should be no problem in my opinion. But let's look at some of the fundamentals real quick. As you see, again, this is what I was talking about with potentially being viewed as overvalued, because as you see, if we look at the market cap and we take in the debt, really only a drop in the bucket. So the debt, in my opinion, not really a red flag here in this situation. But as you see, quick little calculation, that's how they come up with the enterprise value. You can see the enterprise value, $3.25 billion, company right now above $4 billion. So doesn't necessarily mean that, now it's at the high of the day now, and we're running here. But as we see here, the enterprise value essentially is what another company feels that this company is worth, but you know, it doesn't necessarily mean that the market cap's going to drop to $3.25 billion, but a sell-off could happen. A sell-off could happen. Okay, we're beating on yearly EPS and revenue as well. Very nice. Switching over here quarterly, we can see that the cash has made a nice jump here for the last quarter. As we see the cash, the dark blue bar, 350 million. 250, 255, 258, and then boom, we pop up to 485 million. So the company holding some cash on hand, in my opinion, should be reinvested into the company, but of course, that's up to them. But the debt as well, we can see the debt was here 5 million for about 3 quarters in a row. Then we jump up to north of 13 million. Now as of last quarter, 19 million. So again, in comparison with the business that the company is doing and the current value of the company, the debt, that's why I say it's not really a red flag. However, it has been rising now for 2-3 quarters back to back. So definitely something to keep an eye on. And right here as well, the short-term liabilities outweighing the short-term assets. This is why I'm saying if you tell me this stock drops 5, 6, 7 points before it goes higher, I can appreciate that. I can understand that. On the quarterly side, though, we can see assets outweighing liabilities. But Coming down here, we can see, again, consistent growth here in the revenue side. Of course, that increases the cost of goods sold. Total revenue minus cost of goods sold yields gross profit. We can see profit slowly climbing here. And again, you can see, go back, 4 quarters, and you can see the gross profit, 36, 35 million. Now we're up to 70 million, right? So we've doubled the gross profit that we're taking in here from the business inside of the last 12 months. Phenomenal in my eyes. Operating expenses obviously have increased. So gross profit, again, over the last 4 or 5 quarters is up about 100%. Operating expenses, yeah, pretty much in line here. Even going from these lows, you could say it's up, roughly 50% from where it was, but the revenue and the profit off of said revenue is increasing at a higher rate than the operating expenses. So in my eyes, not really an issue. And of course, gross profit minus operating expenses yields operating income. And you can see, look, we were down here minus 50, minus 60 million, slowly been climbing quarter over quarter now, 4 quarters in a row, and we're sitting at only minus 19 million. So very, very good growth here that I'm seeing. This right here is probably the red flag that, in my opinion, could potentially keep the company down. I'm sorry, I'm just watching the stock climb here as we speak. And again, we were talking about that potential bull hammer. Now we have about an hour left, so it could happen. But here we can see assets up about over 100% from where we were back here about mid-22. Assets up here 1.32 billion. However, liabilities have essentially been growing at the same rate. And for the most part, the assets have been outweighing the liabilities. We can see last quarter they kind of met. And now we can see that assets have climbed above liabilities. So, kind of tight, kind of close. And this is why I'm saying, again, I can understand if we do just kind of stay in that downward consolidated channel and we kind of have the appearance of a stock that's selling off and dropping down. But again, end of April, that's going to be the next big quarter here for this company. That's when, in my opinion, we're going to see a potential breakout. Assets minus liabilities yields total equity. And you can see it's been sitting down here in the low tens of millions. But as of last quarter here, now we're up to north of 170 million. So, not too bad. So we have a little bit of a rising debt. We do have some increasing liabilities. And what that leads to, again, is a smaller book value per share. Excuse me. And we can see here book value was just slightly positive, got all the way down to flat as of last quarter. And now we can see coming in here book value jumping up to $1.89. So when looking at that metric, we could definitely make the argument that we're overvalued, right? If the company closed its doors and had to liquidate everything in its name, it would be it would be worth a little less than $2 a share. Stock right now trading north of 46 currently. So again, I can understand that we have, 1 or 2 things that could potentially keep the stock down. But overall, I do like the growth. Again, the actual business is growing. The revenue is growing quarterly and annually. Profitability coming in above expectations. And again, we can see that net margin percentage just slowly stepping up and climbing here quarter over quarter following the revenue. And sometimes we've seen companies, they end up making more money quarter over quarter, but yet somehow the losses widen, right? And they're still bleeding. They're still losing $1.5, $2 for every dollar that they're making. So we're kind of seeing the opposite situation here with Symbotic. But there is no PE because EPS is negative. Price to sales currently trading 2.7 here. Was up above 3. We can see, though, going back over the quarters, I'd say that looks like an average of probably like 1.5, 1.6. So here at 2.7, again, I understand if we do drop down before we go higher. Price to cash flow popped up. We can see currently sitting at about 36.5. Before that was kind of trending downward, but I will say in their defense, they have posted some decent quarters here back to back with beats, so I can understand if we pump it up. But looking on average, I'd say that can come down to like 20, believe it or not. So up here at 36.5, it's pretty high multiple. And again, we can see that it was trading significantly higher in comparison to its book value, and now it's trading here in the low 20s. So again, could technically still be viewed as high, especially looking at something like this with the enterprise value technically being viewed as almost $1 billion lower than the current valuation, which is why I'm saying a pullback here to the, a 10% drop here to about 42, or even a 20% drop even to 38, 39. It could happen. It could happen. So basically what I'm saying is, overall, in my opinion, I like the company. I'm seeing a lot of growth here in the business. And if you told me I'm starting to piece my way in now, and obviously if it drops down to 38, you're going to go in a little bit heavier, I can understand where you're coming from. I'm not going to come out of left field and call you crazy just because some of these numbers are negative, because what people gloss over sometimes is the actual growth in the fundamentals. And they just see like one or two negatives, one or two red flags, and they might just make the assumption like, this thing's a piece of crap, it's going to start tanking. But, anything can happen. But in my opinion, I think we have a grower here. Return on assets now just slightly negative. Return on equity obviously was much lower, sitting here at minus 22%. Return on invested capital coming from these depths here, now we're less than minus 20%. Gross margin percentage, as we see, was up at 18, drops down to 15, 17, 15, now up to 19. Very nice. These are the main profitability ratios here that a lot of analysts look at. And that's why when you see, like, we have the bouncing around in the mid to high teens, and then boom, we pop up to 19%. Very, very nice look, in my opinion. Operating margin, again, we looked at it, minus tens of millions, now it's just slight, and we have minus 22%, minus 33%, and since that bottom, they have been consistently increasing their operating margin percentage here quarter over quarter, climbing all the way up to only about minus 5%. So the company's definitely doing some things right. The EBITDA, earnings before interest, taxes, depreciation, amortization, as we see, drops down to minus 32%, then basically halves back up, and now has been slowly climbing quarter over quarter, now sitting at about minus 4.3%. Very nice. Net margin percentage we looked at before, as we see, drops down to about minus 3.5%, and has been slightly climbing quarter over quarter, now sitting at only about minus 0.5%. Inventory turnover has been climbing quarter over quarter, as we see, was down here 4.5, sub 6, now quarter over quarter slightly climbing up to almost 9. Asset turnover has been bouncing around, but again, it's because of those lingering liabilities. So I just feel like, the more time the company has, the more cash that they generate for themselves, obviously they're going to start, probably you're going to start to see that separation between the value of assets and the lowered value, hopefully, of liabilities. But we'll cross that bridge when we get to it. Debt ratio is very low. The company only has, what did we say, like 18, 19 million in debt. We looked at the forecast, looking very nice. Let's check annually. So we can see here for 23, 1.18 billion coming in is 7.77% above expectations, and we can see that they're forecasting that this growth will continue, and we're expecting about 1.75 billion for 24, 2.5 billion for 25, over 3.5 billion for 26. Phenomenal growth. If this company is able to do this, then in my opinion, I mean, we're talking probably $100 stock, believe it or not, and even now, currently, again, I know the book value is low. I understand the liabilities could be viewed as a red flag, but here, 4.1 billion, and now, the company's bringing in 300 million in change. So now the company, again, about, 1.1, 1.2 billion for the year. So they're trading technically right around 4 times annual revenue, which, for a, what do they do again? What I mean, tech engages in, robotics, movement technology. That's what I mean. The type of sector that they're in, we can also make the argument that they're only trading 4 times annual revenue. You know what I'm saying? But I do think that we may potentially pause for a little while before taking that next leg higher. But if this company, again, just continues doing what it's doing, then chances are Wall Street is going to reward it, and it's probably only a matter of time before it's going to get back up to those 60 levels, in my opinion, up here 64, and then again, if we move now calendar year, if we're going into Q1, Q2 of 2025, and the company's on pace for this $2.5 billion, this is why I'm saying even 4 times that annual revenue number would be a market cap of $10 billion, which would be about 150% move from where we are now, which would bring us to over $100 a share. That's how I personally came up with that price target. So long term, I do believe in it. But again, when you're piecing into a situation like this and you're playing it more for the long term, you can't completely ignore it, right? Because the company, again, is expecting bigger and better things. But if all of a sudden, like this quarter here moving forward, right here, 450 million. So let's say the company all of a sudden does not come anywhere near that number, and then they post like 380, 390 million, and they miss by a chunk, the stock is going to take a massive hit. I'm in my opinion, I'm telling you right now. So that's why I know a lot of people always say, oh yeah, I'm just buying shares when I can, and I'm just going to forget about it. You cannot just forget about anything. I don't care how much money you have, who you are, who you think you are. You have to at least keep an eye on these earnings reports. Because if all of a sudden this growth stops, or it's hindered, or it begins to plateau at around this $400 million mark, you may have to reevaluate your situation, because I promise Wall Street will be reevaluating at that point. And if they decide, like I said, it's overvalued, some of these metrics are negative, look at the book value, still down at $2, the stock is up at, 50, 60 hypothetically, trust me when I tell you, they're going to start smacking it around. So I understand, I'm just buying it and forgetting it, and that's fine. But also at the same time, you cannot be completely oblivious about your positions. But revenue growing nicely across all segments of the business. We're seeing, again, about double revenue growth here in the States, and we're also seeing some slight growth here in Canada. So chances are, if the company, again, continues doing what it's doing, everything will be fine. It is near the top now, less than an hour to go. We could potentially, again, have the bullish hammer forming, which could bring us up potentially 47, 48, 49 in the next day or two. But if we do pull back and sell off here to the bottom of this channel, you're looking at about 36 and a half, right? And we could potentially get as low, what's that, 35.85. I don't know. It's hard to call because, again, I can understand why the stock has been climbing, but also at the same time, the markets have been raging as well, right? And that goes back to what I was saying at the beginning of this video. If we are now reevaluating all of this economic data that's coming out, and we're going to start beating markets up because of whatever, mortgage rates, the Fed is delaying their rate cuts, CPI coming in above expectations, right? So now if we kind of have a quote-unquote negative vibe and aura around the market, we could start selling off. And again, something like this, even though they've been doing well, book value less than $2, something like this can definitely take a massive hit and drop down here into the high mid-30s. If markets really sell off here throughout February and March, you can see here, right where these lines meet up, you can see this is March 4th. So over the next 2 to 3 weeks, we do have the potential for the stock to get smacked up. I just want to throw that out there. Don't always think whatever stock you're buying is just impervious to these sell-offs. So you understand what I'm saying? If it can go lower, like I always say, if it can go lower and times get rough, Wall Street will definitely take it lower. Switching over here to stock charts. We can see RSI here on the daily sitting at about 52 1/3, kind of mid-range. Got up above 70 here at this mark and then did pull back, tried to stay above the mid-Bollinger Band. Tried to bounce here multiple times off of the 200-day moving average. And, of course, recently broke it, but then immediately rebounded. So, technically, the stock actually does seem pretty stable here, in my opinion. And even though it is bouncing around, I have a feeling that if it does start dropping and it comes down here to the 200-day, it's looking like it'll probably have a bounce off of that level and try to get back to the 50-day. So, like I always say, buy the dips, sell the rips, but, sometimes it's hard to call. But here, again, I I'm not necessarily saying it's not a buy here at this level. I maybe would wait for a little bit of a better price. Stock down here to 46.10. So again, we have to see if it closes at the bullish hammer. MACD kind of been bouncing around. You can see we crossed to the downside there on that big drop, and then we kind of immediately crossed back up and started climbing and getting above that 200-day moving average, which is why I'm saying it could sell off several points, but I don't know if they're going to completely take it to the shed and beat it up. But, piecing your way in here up at these higher prices, because again, look at this. Right? The stock's been on a tear. So piecing your way in here, and then if it does, again, pull back like it did here, and it drops back down to the 50-day in the high 30s, then, you step in, you buy a little bit more. But as the stock has been climbing here over about the last 18 months, you can see now the 50-day has completely risen up and made itself a nice little support level for the stock. Was all the way down here looking like $12-13. Now we're up here at 38.5 on the 50-day moving average. So we're seeing some really nice growth here. But like we always say, what goes up must come down, and usually does, even though a lot of people don't want to hear it. But again, if it does start dropping down into the 30s, I personally would not be surprised. Here on the weekly, we can see the RSI at multiple points was well above 70 and kind of held there for a while, had these slight drops, and then kind of rebounded immediately. But this is going back to the end of July, no, right about August, it looks like. And that's when the market began selling off, right? August, September, October. It comes all the way down here. Now you can see from November, we had that immediate pop. And now that's what I mean. Like since then, it's kind of been in this downward consolidating channel, which again is why I say, in my opinion, it will most likely stay in here and then here for these earnings. Again, estimates over 400 million. If the company comes out and posts like 430 million, 440 million or something crazy like that and just maintains that percentage growth of revenue quarter over quarter, then the stock is probably going to take off from that level. So even if you're holding for the long term and it gets beaten up here, 38, 39, then when these earnings come out, like I said, it will most likely immediately reclaim the mid to high 40s and potentially get up here to this trend line here of about 54 and a quarter, it looks like. But again, we'll cross that bridge when we get to it. We'll keep an eye on the earnings report when it comes out. Random ad. And we can see also the MACD recently crossed to the downside, so that's kind of adding also to the downward momentum. Let's check the pivot points real quick before I let you guys go. Pivot points on the weekly, we can see here we have a key level 42.38. So you can see as it slightly began to break that level, it immediately bounced up. So in my opinion, you may only have a downside of about 10-15% here, which of course does seem like a lot when we're talking about size. But again, if you started buying, at the 50s and you're buying here, piecing your way in the mid 40s, and then all of a sudden it drops down to 42 or 38, yeah, it's going to suck in the short term, but if we liked it at 46, we're going to love it down there at 38. So that's why I always say, take what the market gives you, follow the money, right? It seems like the company growing nicely, posting some growing, healthy revenue, for the most part, consistently beating estimates. So that's why, piece your way in my opinion. And if you do have that flash crash, then of course you can go heavier if you'd like. It's entirely up to you. But here on the daily, we can see we rejected recently off of this resistance level of about 50.11. We spiked up and then immediately dropped back down, but it seems to be holding currently the 44.77 pivot point level. So we'll see now again, if we do potentially form this bullish hammer, or if we're up a little bit tomorrow, we may climb up here into the 47s, and then the stock, just kind of like it did here, may pop up and then end up rejecting the 50-day and pulling back to the mid-low 40s. So we're going to have to cross that bridge when we get to it. But again, overall, I do have to say, company looks pretty decent. I do like the growth. The liabilities could be viewed as a little bit of a red flag. All of a sudden, the company's taking on some debt on its balance sheet. Not always necessarily a bad thing, but of course, not always a good thing either. But holding cash of about 450 million, I believe it was. But Again, on the technicals, dropping below this long-term support line, we have this kind of consolidated downward channel taking place, and of course, book value, $1.89 or whatever it was. So again, I can understand if we stay down in this channel until April, what was it? Yeah, end of April, estimates April 29th. So we'll cross that bridge when we get to it, and potentially, again, I'm looking at a lot of stocks, so I apologize if I don't always do immediate updates on everything we looked at, but, try to, if you can, try to remind me when when we're nearing this earnings date, and we'll try to, look at the technicals, see if it did stay inside of this channel, and try to, again, it's easier to react than it is to predict, but we'll see, for the fun of it, if we can try to predict what's going to happen here going into these earnings, and how it performs over the next 6-7 weeks. We'll take it from there. But that's pretty much it. So once again, Stocks by the Numbers. Thank you guys for stopping by. If you have any questions, comments, or concerns, drop down in the comment section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But also, before I let you go, as you see, D.A. Davidson upgrades Symbotic to a buy from neutral. Price target 50. Phenomenal. It's about a 10% rise from where we are here. Okay. That's pretty much it. Maintain that outperform by Baird. That's what I mean. So they see the growth of the revenue. So that's why they really know that they can't be too pessimistic here. It's almost like you have to be optimistic when you're looking at a growing company, even if it's going to, again, take a pause for several months, or start consolidating for the next 3-6 months. And it needs, increases in revenue for these earnings coming out to really pump it up to the next level. But Goldman Sachs lowers their price target to 44 from 51, keeps a neutral rating. In my eyes, they're just kind of trying to play it safe, because I probably would have kept that 51 price target. Deutsche Bank. There you go. Raises price target to 57 from 52. Maintains buy rating. So that's why, again, just like when we looked at the analyst recommendations, they're all pretty much saying to either buy it or hold it. So I can appreciate the fact Goldman Sachs kind of playing it safe, but KeyBank here, 255 from 63. Yeah, 63 might have been a little high. Keeps overweight rating. Yep. Cantor Fitzgerald maintains $60 a share. That's what I mean. For the most part, everyone is basically saying it's worth at least this, if not more. And again, nothing, of course, is guaranteed, which is why I say the growth that they're forecasting is very nice. But we just have to keep an eye on it and just make sure that they actually do what they're forecasting. And if they do, then we're going to be off to the races. Needham lowers from 58 to 54, maintains buy rating. Maintain that buy. Yeah, see, this is what I mean also. When stocks go on such a run like this, there is that point where it just has to come back to reality. And then we'll see a situation like this where, oh, they beat earnings again. Why is the stock down? Well, because it just went too high too fast. And again, I know, yeah, Walmart backed and everything like that. But again, as we see here, from the end of November to July, I mean, we're talking what? That's like an 8-month window there. The stock goes from sub 9 to $64. Right? That's what I mean. I know you guys like these high flyers and you get them trending and you're seeing crazy returns, but I'm going to tell you something right now. I know the market's gotten out of hand and we're just throwing around, again, like these 6% days, like for the F of it. But trust me when I tell you, overall, historically, most stocks do not move that much that quickly. Right? When we look at older companies, to have a move like that, rallying 4, 5, 600%, it doesn't take 8 months, right? Usually probably takes a couple of years. So that's what I mean. With a situation like this, if it does begin to sell off and drop back down to the mid to high 30s, in my opinion, it would be 110% understandable and justified. But right here, also, I just want to show you, this was the bottom of this candle, September 26, 23, going to the bottom of the bodies of these candles. Actually, it's the bottom. Let me zoom in. There you go. See it? The bottom of that candle, September 26, 23, to the bottom of that candle, November 9th, 23, connects to the bottom of the bodies of the next two consecutive candles, November 10th and November 13th. So that, in my opinion, looks like that key support level. So again, we could rally here off of this recent momentum in these technicals back to the high 40s, but then chances are it will reject, and then we'll have to keep an eye on this fib, 39.76, and then we're going to have to keep an eye on this purple support trend line, because if it does break here, looking like the high 35s, mid 36s, if it does happen to break there, and again, we're talking what, mid-March. So on our way to these earnings, if it does happen to break this level, you may see a drop of like 10 points almost immediately, and it can come back down to like here, like 25, before going into earnings. So again, this is why it is difficult. And I do like looking at the numbers more than the technicals, especially if we're talking about a long-term buy, right? Because you like from these levels, I can appreciate the fact if you told me, no, in my opinion, I'm giving it like a 99% chance it's going to grow from this level. It'd be more understandable, right? It would be more accepted down there at that level. Now we're talking up here, you know, 60s, now we're in the 40s and the 50s. Now we could be viewed as a little high, which is why I'm saying, and again, it looks like I don't know if the stock is going to be able to form that bullish hammer, but in my opinion, I do think that we actually go lower before we go higher, and right now I would remain patient. But yeah, okay, I've talked way too much. So thanks for stopping by. Like the video, subscribe to the channel. I love you guys. Thanks for your time. Have a good day.